Welcome to Bears in Exile. Today is Tuesday, April the 2nd, and this is a quick hit on the indexes and a couple of other small things. Starting off with the Dow. So this was really, really good. We were saying last night we were expecting an up day, and we certainly got it. This was fantastic. I've been looking for a blow-off top, and while this doesn't really meet all of the criteria for a blow-off top, it certainly is a great move in the right direction. Very nice move up, almost 90 points, closing outside the upper Bollinger Band after it squinched here. Closing above the upper price consensus level for the new month. And doing all kinds of really great things that we were looking for. So I'm very, very pleased with this move. For one, it crossed and closed above 14,600, which doesn't mean that much, but really that's pretty cool. But beyond that, what do we have? CCI very high. Stochastics holding high, making a new really good high and creating significant negative divergence. 14-day RSI moving average going sideways, holding high, going up on the RSI, making fantastic negative divergence. We talked about the desire for a higher peak, well, a lower high peak here, and it is certainly trying to do it. Also going for a bullish cross on the MACD histogram, potentially setting up for even more negative divergence. This is simply beautiful. This is just absolutely wonderful. Can't say how pleased I am with this move today. Moving on to SPX, which was subdued compared to the Dow. We did make a new recent high today, bullish. It is not as high as I would like it to be. I still think that it is, I don't know, 10 points roundabout. I mean, maybe it could go all the way to 1,600, but really, I think 10 points would be fair anyway. But very similar to the Dow, just not quite as developed on some aspects. CCI not as extreme. The stochastics holding high, negative divergence, getting ready to hold and roll. I hope it can hold just a little bit more. 14-day RSI moving average going sideways, negative divergence. RSI ticking up, negative divergence. Trying to get that lower peak, lots of negative divergence. The MACD itself is not as enthusiastic as the Dow, but needless to say, very, very pleased with this. I would just like to rip the faces off the Bears one more time and then call it quits. So be looking for that. Hopefully that'll be done by the end of the week. Heck, maybe it'll be done tomorrow, but I won't get overly ahead of myself. Might as well look at the 60-minute. Does it look like we can get that 10 points tomorrow? Well, that's kind of why I say hopefully by the end of the week. Here with the 60-minute, it is very similar to the Dow. We were talking in the daily running thread today about the need for a pullback and then higher. And to be completely honest, I was not being as patient as I need to be. The desire for these things to finish themselves off and then continue in the manner that we want sometimes just get a little carried away. So anyways, it did a good job today. It came down. I got overly excited once it started going back up. But needless to say, the 60-minute is so massively important. I mean, intraday, that's essentially all that I look at. And, you know, we are poised in the 60-minute for more to the downside. It's enough room to last another day for these to get all the way to the bottom. The stochastics, the CCI, the RSI, MACD histogram. But once it's complete, I mean, this one is definitely has enough room, and the ascending lows, the ascending highs, to break out another time and hopefully bring this to a close. Earnings is right around the corner, and I don't know what those are going to be like. I would assume that they're Well, I don't know what they're going to be like. I'll just say that. Going on to the VIX. This one's very interesting. We said last night the VIX did not look good, gapping up into the bar, spinning top, or actually it was an inverse hammer. Or was it a spinning top? Now I can't really remember. But nonetheless, we said that it looked like it should go down. And down it went. Very nice. We still have ascending lows, at least for the moment. We are in danger of breaking this and going and filling this gap, which isn't really a bad thing. But actually this gap right here. Needless to say, if we close this gap, we could exceed the target that we're looking for to the upside on the overall market, which is why I'm just a little bit hesitant that 1580 on SPX would be it. So the possibility does exist that if this gap fills, we could see 1600. So just want to be perfectly honest with you and with myself. Does this look like it's going to fill? I'm not sure about that. I mean, we're into support. We do have ascending lows. Of course, we have descending highs here as well. This is a bit of a triangle or a wedge. And it could break either way. Now, indicator-wise, we have the stochastics and the 14-day RSI moving average holding sideways right in the middle. Not very helpful at all. CCI is going down, the RSI is going down, the MACD histogram is going down, and the MACD is going down. You would look at this and say, okay, well, that should put a bearish slant on this. And that's absolutely correct. So even though we're in a wedge and it could break either way, yes, the odds at the moment do favor a move for the gap fill. So some caution is warranted. I'm going to point out the VIX VXX because this is absolutely fascinating. I've been talking about this one in the daily running thread to some extent. I thought that it was going to get some kind of a bounce, and I was totally mistaken. Instead, it broke all support, it went lower, and why would we look at this? This is not the VIX. Well, if this one is leading the VIX, which it could be, and it certainly looks bearish, everything is pointing down. That could also give us a tell as to the movement of VIX, which would give us a tell on the Dow and the SPX. So, important? Yeah. New all-time low as far as I can see back. So, at the very least, even if this gets a bounce, which it may not be done going down, we have a new floor to contend with. And the VIX can take damage while this does whatever it's doing. I would go on to TNA, but my program has not adjusted for the split yet. So the chart is essentially broken because everything is skewed thanks to the stinking reverse split, which I am totally not in favor of. That makes this much less profitable when we do get our giant corrective move. So it would have been so much better up here, and they moved it down here. I smell conspiracy, but you can make of it what you want. I'm also going to take a quick look at the internal structure of volume, this time using SPY, just to see if anything has changed. Because we know that we're close. We have to look at this daily to see if there's any development. And as of today, we had talked about the on-balance volume getting close to the target line and its tendency to perk up as it approaches. And we said last night, do not be surprised to see this perk up. And that's exactly what it did. So, running out of time, but yeah, we're not far away. It will break this at some point soon, along with the accumulation distribution. We just do not have it yet, and that is totally fine. We want this to go up some more. No problem. And now, what else can we look at? Maybe there was a symbol I put out in the daily running thread for my current favorite short up and coming, and I did take a position in it today. HRB, H&R Block. Look at this monster. All the way down here from like $19 to $29 in the span of 2 months. I just absolutely love this chart. It is a beauty. Showing some weakness today and yesterday. We do not have a downtick yet, but I would not be surprised to see one by the end of the week, which would give us a nice target just shy of $1 from where it is now, around about, maybe even down to 60 or 70 cents, but still that isn't bad at all. The more interesting thing would be if this were to coincide with a blow up top in the SPX and the Dow. In that kind of a situation, we would be looking most likely at a move down to the VAR, which is currently at $27, a very nice move to the downside. We have this huge gap that needs to be filled at some point in the future, and if we were to get a really nasty move on the overall market, you could expect to see a deep penetration into the long-term moving average bar, which is the second to the last moving average, which essentially at this moment would be a fill of this gap, and would be about 25.5, which almost a $5 move. I am totally on board with that. You can see here from the indicators, massive negative divergence in the MACD histogram. We're looking for a bearish cross in the MACD itself. Negative divergence in the RSI. It's heading down. Heading down on the stochastic. Heading down on the CCI. Negative divergence on the 14-day RSI moving average, although it is still moving up. And internal structure of volume. Wrong menu. Internal structure of volume. Running out of space on the accumulation distribution. About to make a cross on the volume weighted MACD. In danger on the unbalanced volume. Very little space on the dual volume flow. And running out of space on the volume price trend. You get a good move to the downside, and all of these will flip together, creating most likely 5 reds to go down into that gap fill target. Doesn't mean it's going to do it tomorrow, doesn't mean it's going to do it by the end of the week, but in the short term, very convincing. Just my opinion. And I think there was another really good one out there that I was looking at, and I can't remember what it is. Oh, SLV. Oh yes. Oh yes. We've been following this one forever and a day. All the way back up here. I have not done metals the last couple of nights. Just has not been interesting enough. But we had been tracking it nightly all through this boxy area. Going sideways. We had talked about the previous targets to the downside based upon time, and this trend line going down. And last time I made it, I believe the target was 26, because I thought that would take that much time to get down there, and once you know it, as of today, down here 26.35, perfect, hitting that descending trend line and getting very, very low on almost everything. Matter of fact, making positive divergence really convincingly. On the next pause and turn on everything, this is going to be a really nice long. It is not there yet. It is setting up for it. So 2 things that I'm looking at really close. I think there's going to be a fantastic opportunity really soon. We have gaps above that need to fill. Beautiful. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.